Hey everyone, this is Scott here again with a new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And in today's video, I'll be answering the question of how much money or how much capital do you really need to start trading options? And the answer to this question is actually one of the main reasons why I definitely prefer to trade options over stock. And if that sounds interesting to you, then please do me a favor and hit the like button on this video and subscribe to my channel. I would greatly appreciate it. And so as usual, before getting started here, if you would like to take some in-depth classes on options trading, and stock market investing, then please check out my courses on SKILLSHARE. I've been teaching on that platform for well over a year at this point, and in case you aren't aware, SKILLSHARE is a lot like YouTube, except the content on that platform is geared solely towards the purpose of education in the form of online classes. And in my classes, you will see a lot of the detailed research and analysis that I have done using real stock market data, spreadsheets, graphs, and even computer programs that I have written to help simulate and prove the concepts that I am teaching. And I have provided some links to some of the more introductory courses of mine in the description of this video below. Now, you will need a premium membership with the SKILLSHARE platform if you do want to watch my courses, but if you do sign up for that membership using the links provided in the description of this video, you'll get an absolutely free 2-week trial. And during that time, you can watch all my courses on SKILLSHARE absolutely for free. And then once your trial is over, it will only cost you a few dollars a month to maintain your membership, and you'll gain access to all the future courses that I have planned going forward, in addition to all the other courses that are on SKILLSHARE too. And if you decide it's not for you, no worries, you can cancel before your trial is over and you won't lose a dime. But again, if you are interested, then please check out those links below and join the thousands of other students that have already taken my classes. And so with that being said, we're going to jump over to my trading platform now and we'll get things started. Alrighty, welcome to my trading platform here. And what I have pulled up is a 1-year price action chart of SPY. Right, this is just an ETF that tracks the S&P 500. And this is one of the most heavily traded products in the entire marketplace worldwide. So I would definitely imagine that if you are either a new trader or even if you're a seasoned veteran, SPY is most likely going to be an asset that you'll be trading quite frequently. And so of course, since this video is all about how much money or capital do you really need to get started trading, then I'm going to assume that you're more of a beginner trader. And so let's say for starters here that you wanted to invest in SPY, you wanted to invest in the S&P 500, and so buying shares of this ETF is a great way to do that. But the issue with this is even if you wanted to buy just one share of SPY to get started, you're going to need almost $400 to do so. Right, the current trading price of SPY at the time of this recording is $387.03. So even if your entire trading account had $1,000 in it, you could only afford as of right now to buy 2 shares of SPY. And moreover, if you were to do that, then almost 100% of your entire portfolio would consist of SPY. Now that's not necessarily a terrible thing, right? Because this is tracking a well-diversified index. And some people just want to invest in the S&P 500 and that's it. So like I said, it's not necessarily an issue if your entire account is just made up of SPY or broad market ETFs. But for me personally, and what I do recommend for others to have as well, is a lot of positions in your portfolio, and specifically a lot of well-diversified positions. But if you're starting with only a few $1,000s and you're trading stock or ETF, especially with some of these ETFs that are very high priced, you're not going to be able to achieve that diversification. You might only be able to have 1, 2, or 3 positions, and that's it. And you would also likely be using 100% of your capital. So this is the main reason why I don't like trading stock that often, why I much prefer trading options, as you'll see here in a minute, because trading stock or ETFs requires a lot of capital. And with options, however, you can construct trades that require as little as maybe $50 per position. And in fact, you can actually trade SPY using options and only have to put up as little as around $50. And that is the major advantage that comes with options. They can be much less capital intensive and therefore can allow you to get started trading options with much less capital. So let's come to the trade tab now and take a look at the option chain for SPY. And let's go into the April expiration option cycle. And I'll scroll down a bit here, down to where the at the money options are, so right around here. And so now, for example, if you were bullish on SPY, which would also be the case if you wanted to buy shares of SPY, then instead of buying shares of SPY, what you could do over here is sell a put credit spread. Now this video is not going to go in depth into all the different strategies you can use to trade options. And in fact, as of right now, I do have a very in-depth video explaining the put credit spread strategy. I'll post a card above linking to that video so you can watch it. So in this video here, I just want to give you a demonstration of how little capital you actually need to start trading options. So for example, looking at the put options here, like I said, if I wanted to get some bullish exposure to SPY, then what I could do is sell maybe the 375 strike put option and then also buy the 374 strike put option. And this would be a $1 wide, right? Because the strikes are $1 apart, a $1 wide put credit spread. So let me go ahead and set up this order. So I'm going to right click on the 375 strike put option here. I'm going to go to sell and then go to vertical. And that's because credit spreads are also referred to as vertical spreads. So I'm going to sell a vertical here. And so as you can see, I'm going to sell one contract, put option 375 strike, and then also buy at the same time the 374 strike put option. And so for selling this spread here, I'm going to take in $23. That's what this credit means here. And the cool thing here is that even though I'm bullish on SPY, I want the price to go up, but even if I'm wrong and the price of SPY actually falls, as long as the price of SPY stays above 375, the strike of the option I sold, then I will still get to keep the full $23. And moreover, think about this also in the context of buying one share of SPY. If I were to buy one share right now at $387 per share, then SPY is going to have to rally all the way to $410 per share for me to make the same $23. And that's going to be about a 6% increase from where it is now. So not only does SPY have to increase by 6% for you to make the same amount of money as selling the spread here, you're also going to need to put up $387. And that's opposed to only $77 for selling this put credit spread. And the way you figure that is simply taking the width of the spreads here, so $1, and you subtract from that the credit you receive initially. And so I know I said the credit here is $23, and that is true, but it is quoted here on just a per share basis, right? Because options are tied to 100 shares per contract. So the number you actually see here is 23 cents. So really you just take $1, the width of the spreads, minus 23 cents, that's 77 cents, and then you just multiply that by 100 for the 100 shares these contracts are tied to. That gives you $77. That's it. So you only have to put up $77 for this one position as opposed to almost 400. And moreover, SPY can actually fall by about 3%, which is about $12, down to 375, and you'll still make the full $23 here. So I hope you can see that this is very powerful stuff here. Options can give you both a much higher chance of making a profit, even when you're wrong in your directional assumption, and also, depending on the strategy you use, you only have to put up a very small amount of capital, $77 in this case. And if you wanted to make that even less, then you could simply come even closer to where SPY is currently trading. Meaning, instead of selling the 375 strike put and buying the 374, maybe I want to sell the 382 strike put and buy the 381. So setting up this order real quick, I'm going to go sell vertical spread again. So in this case, getting closer to where the ETF is actually trading at, you're able to take in even more money initially, and then applying the same procedure to figure out how much capital you need to put up initially, $1 wide minus the credit you receive, that's 70 cents times 100. So in this case, you only need to put up $70. And so now answering the question of how much capital or money do you really need to get started trading options? In my opinion, I really don't advise allocating more than 5% of your total account capital for one particular trade like this. So let's do some quick math here. Let me pull up the calculator. I'll move this over here. So looking at this trade right here, the amount of capital I need to put up for my total account, in this case, is $70. And like I said, I generally don't advise that amount of capital being more than 5% of your total account value. So $70 in this case is 5% of what larger amount of money? And to answer that, we just take 70 here and divide it by 0.05 and press enter. And so in this case, that would be $1,400. So with $1,400, you could either buy only 3 shares basically of SPY and have your entire portfolio just consist of SPY and almost 100% of your capital tied up in this one ETF or in this one position, or you could use options to have one position on SPY that only takes up 5% of your capital, and then you could have 10 or 15 other positions on anything else that you want. And that would allow you to have a very well-diversified portfolio because you'd have a lot of positions on in different stocks and ETFs in different sectors and industries, right? Maybe you have a few broad market ETFs like SPY. Then maybe you have other positions on some stocks or ETFs specifically in the oil and gas industry, maybe other positions in emerging markets, and then a few maybe just focusing on the tech industry, so on and so forth. And moreover, the fluctuations you see in your account should be much, much smaller and more manageable than if your entire account was just taken up by shares of SPY, right? For example, if on a particular day, SPY had a big down move, then if that's what your entire account consists of, then your whole portfolio is going to go down along with it. But if you have many different positions, some that are not even directly tied to US equities, then even on a down day in the market or a down day for SPY, your portfolio might be totally fine. I, for example, actually construct my portfolio with my various positions to be slightly bearish on the market right now. So even on down days for SPY, on down days for the broad US market, those are usually profitable days for me. And that's also something that options allow you to do a lot more easily than with stock or ETFs. If you want to get short exposure to certain stocks or industries or markets, options give you a ton of different ways to do that. You can buy put options outright, you can buy put debit spreads, you can sell naked calls, you can sell call spreads, and if none of those terms sound familiar yet, don't worry, I'll be making tons of videos on the various options trading strategies going forward. But point is, bottom line, options give you a lot more flexibility in how you can construct trades or your entire portfolio as a whole without having to put up nearly as much capital as if you were just trading stock or ETFs. So to really answer this question of how much money or capital do you really need to get started trading options, there is no one specific number, but I would say generally around $1,500 would be the absolute minimum, especially if you want to trade options the way I do, specifically selling options that are out of the money and giving yourself a very high chance of making a profit, as I've demonstrated with these put credit spreads here. Then generally speaking, for $1 wide spreads like this, I would aim to take in around 30 bucks and risk about 70. And so if 70 bucks is about 5% of 1,400, then like I said, just kind of rounding up a little bit, 1,500 bucks or so, I would say is the absolute minimum. But of course, the more capital you're able to start with, the better. And I'll make more videos on this stuff going forward, but the more capital you have in your account, the even more freedom and flexibility you're going to have with managing your trades and being able to take advantage of different and better kinds of strategies. The put credit spread here is a great strategy to use. I do use it quite frequently, but if I can, I would prefer to just sell a single put option, right? For example, moving this over, instead of selling the 382 strike put and then buying the 381, I personally would prefer to just sell the 382 strike put and leave it at that. And doing this would be a naked put strategy, and that's something you can only do when you have a lot more capital. But like I said, if you are just getting started and you are looking to just kind of test things out, then I would say around 1,500 bucks, and that's all you need. Alright, so that concludes this video. I hope you enjoyed it, and please let me know your thoughts in the comments below. Were you a bit surprised by my answer to this question, or was my answer much more in line with your expectations? Let me know. And don't forget, if you want to take some in-depth classes on options, options trading, and stock market investing, then check out my SKILLSHARE courses, links in the description of this video. And lastly, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel, and make sure those notifications are turned on. I'll be dropping new videos every Monday, Wednesday, and Friday, and you don't want to miss out. So thanks again for watching, and I'll see you next time.